To what degree do you think that really Donald Trump is, in fact, negotiating, or maybe a more appropriate word, pushing China from a position of strength?
Well, I think with NAFTA, there's probably more strength than there is with China. I think with China, we've seen this tit for tat going back and forth. And, right now, we don't see any chance, I think, of a winner on either side right now.
All right, looking ahead, we are T minus 10 days until those tariffs could be enacted, $200 billion. Do you think they will go ahead at this point?
Well, at this point, I think so. We've still got an open comment period, and there's rebuttals that could happen over just the next week. And then you could see that implementation come very quickly. And so far, we haven't seen the administration back down on those pushes.
So, Jason, what does this mean for the dollar trade? If we're seeing worsening U.S.-China trade tensions, is that long dollar play still intact?
Well, I think there's two bigger things that are maybe driving the dollar right now on a global basis. And the first is last week, what Jay Powell said. Again, if you looked at his speech at Jackson Hole, neither the word tariff nor the word trade even appeared in his speech, even though it's a major risk. So that's something that's really off the table for their considerations. And he came across as really dovishly hawkish, the intention to very slowly raise rates. I think that's probably more important for the dollar right now than what's going on with the China trade.
Yeah, what do you make of this move from the PBOC in the last couple of days? They're allowing a little bit more flexibility, or actually there's more room to determine that exchange rate through its daily fixing and introducing this counter-cyclical factor once again. Do you think it's enough to also stem this rout we've seen in the renminbi as well?
Well, I think that the trade war, there has been a significant risk that the what's become a trade dispute, that's become a trade conflict, that's now a trade war, could spill over very easily into becoming a currency war, right? We've seen the renminbi weaken significantly. We saw the People's Bank of China make certain moves previously to coincide with certain tariff kickoffs from the United States. We've already seen that happen, and there's a risk of that continuing in the future. And to be honest, if we're thinking about the renminbi as potentially facing devaluation beyond this as a means to boost trade and economic growth, I think that's still a risk that you could see further weakness from the RMB.